Have you ever wondered how wealthy people just continue to build additional wealth? Well, in today's video, we're going to be looking at 15 personal finance rules that really do help you build wealth and help you maintain that status, because it is all about the smart money moves that you make. Starting with number one, they spend less than they make. Now, it's really easy to go out and buy the new tech, have all the new gadgets, have the flashy cars. But when you look at money and when you look at the power and the compounding effect that we can see with this, every single dollar that you're not spending on expenses, every dollar that you can save, that you can cut costs, is another dollar that you can invest. Now, when it comes to the investing, it is really the choice to build wealth versus having goods. They also look at the frugality aspect of it, meaning that they're willing to pay a little bit more for a quality and a much higher quality than going and buying out the quantity that we do see, making it really some smart money moves. When we look at number two, we look at paying themselves first. So here's the deal. Before you pay your bills, before you splurge on anything that you want, having the ability to stash away a chunk of money into an investment account, 10 or 15%, going straight into savings, going into the 401k, going into the investment accounts are going to be a game changer, because that is going to cover future you for the rest of your life. When you start getting the snowball effect with the investing, you can actually see this getting into generational wealth. Even a very small percentage is going to make it a habit when it comes to your paycheck and when it comes to putting money away. As we get into number three, they make the money work for them. That's right. If you have a pile of cash sitting in a savings account, really doesn't do much. Usually the interest rate is almost negligible to making nothing. When you look at wealthy people, they're putting their money to work for them. That is investing in stocks, in bonds, in real estate, you name it. If there is a risk, and of course there is going to be a risk behind it, but when you're investing money, it is what gives it the ability to grow. If it is sitting just in cash reserves, a lot of people used to say that cash is king, but looking at inflation, looking at the consumer price index, having cash and sitting on cash is not going to be beneficial by any means, because you're not growing it and you're actually technically losing a certain amount of cash due to inflation every single year that it isn't invested, which does make a very big difference. Now, of course, looking at our next one, avoiding bad debt. When you think of investing in the compounding interest, it works the exact same way when you start looking at credit cards, when you look at personal loans. It is a way to lose value and really lose wealth beyond really the financial savvy people that manage the debt and manage the debt well. Now, of course, there's that little 1% that manages debt that carry a lot of debt. But when you look at the average individual carrying debt, and the credit card rates are roughly 25%, this is eating up all of the money. And it is also eating up all of the power that you possess to actually invest, to grow your money, to turn essentially your dollar into more dollars. It is being stolen away from the loans that you carry. Looking at student loans, looking at mortgages, looking at auto loans, even looking at signature loans, credit card. There are so many types of loans in such high balances that people do carry. It is detrimental to your financial future. We always look at the continuing education portion. When you think of continuous education, it is the ability to really, as things change, as money changes, investment strategy changes, any part of your life, you have to be learning, you have to be really growing. It is a very, very important, even when you look at Warren Buffett, and he's reading for multiple hours a day, reading the financial news, looking at books, looking at taking courses, staying sharp and knowing your decisions, especially because when it comes to the formal education program, the financial literacy out there is not really anywhere that it needs to be. Even when we look at investing, and when we looked at the video on Gen Z, roughly 17% of Gen Zers heard about investing during high school. That's right. You are talking 17% of high school graduates in that age range learned about investing in high school, which means we have the other 80+% that know nothing about and when it comes to investing. And of course, when it does come to investing, clear financial goals are really the way. If you want to retire by 50, if you want to send your kids to school, if you want to buy a dream home, you have to set up something that is going to be challenging for you, but also a financial goal that you can aim for. And of course, this is going to have some of the adjusting in the way, and you can make adjustments with your budget. You can do it a couple different ways, but overall, if you don't have a goal, and essentially you're not going to reach a goal that you don't have, especially when it comes to finances, it is one of the absolute most important things. Your financial situation might change, might have a job loss, might have a new kid, might have some additional expenses. Adjusting your budget and making sure financially that you have everything set is going to be a game changer. And of course, multiple streams of income. This is something that we've touched on and we've talked about before. Relying on one 9-to-5 job is kind of an older way of thinking. When you start looking at statistics, and 52% of Americans do have some sort of side hustle, it really doesn't cut it, especially if by chance that 9 to 5 job is eliminated, you're, laid off, unemployment. The wealthy have a lot of different pots of money that we pull from, looking at rental properties, looking at stock dividends, looking at YouTube, like what we're doing here as a multiple stream of income. And of course, if you like the financial information that I'm throwing out, go ahead and subscribe to the channel, because of course, without the multiple sources of income, when you think of investing, and this is the way that I kind of look at it, is when you look at investing, you are going to diversify your portfolio to a point that you are mitigating your risk. If you're starting to get multiple streams of income, you are diversifying your income with really mitigating your risk. Because again, if the primary job goes away, if that 9 to 5 goes away, you have the ability to supplement a chunk or a majority of your income, meaning that you can make it up, even if it is temporary while you find a new job, or anything should happen of that nature. If you get injured, making sure, again, in a financial downturn where we've seen a lot of people laid off with COVID, it is very easy to handle without panicking, because you have that backup essentially thing that you're looking at. Now, of course, I can't do a video without talking about the budget, talking about the savings plan, the spending plan, whatever you want to call it. When you start looking at your monthly budget, you have to know where your money goes. When you look at millionaires, when you look at people that are very successful, people that are wealthy, they know where their money is going. They are not overspending. They are not overpaying for things. They are looking for discounts. They are really not about pinching pennies, but knowing where your money is. If you want to go to Starbucks and get a coffee, great, go get a coffee. If you want to do it 7 days a week, that might be a little bit of a different scenario, because then if you're getting it 7 days a week and you're getting it 30 days a month, exponentially that money is going to add up. Now, of course, I'm not saying it is the beans and rice Dave Ramsey style, but when you start looking at your budget, there can be a lot of different levers that you can play, whether it is, getting a mortgage that is cheaper, looking for lower rent, a lower car payment, lower car insurance, even trying to cut costs when it comes to your average everyday bill, and especially looking at subscription services, because those are really eating into an insane amount when it comes to your budget and how much money you actually keep from that paycheck. And of course, another one of the 15 personal finance rules for the wealthy is protecting their wealth. Now, this, of course, is one that kind of hinges on life insurance. Now, if you are the primary breadwinner, if you are the individual in the home, especially if you are single income, you have to protect your family, you have to protect your assets. This is where life insurance, which of course, term life insurance would be my bet just because of the price. If you're looking at whole life, it's super expensive, and I would rather buy term life, putting the money that I'm not spending on that whole life into an investment account. And of course, like I said, heaven forbid something happens to you, you know that you're going to be taken care of, and you know that essentially your family could be taken care of as well. I know it is an additional cost, but when you start looking at life insurance, even enough to cover your salary for a couple years, it might be 30, 40, 50 bucks a month. But when you look at your budget and when you look at where you can really cut that, and again, if something happens, you want to make sure that you're protected and make sure that your family is protected, of course, because your income would have suddenly be gone with a lot of additional expenses. Now, of course, looking at patience and discipline, this is something that I feel like a lot of people do not do. And this, of course, building wealth is a long-term game. When you think of investing, and when we talk about even retirement investing, we're looking at the 20+ year time frame, which a lot of people are not really into this. They are not sticking with the strategies. When we look at the investment strategies, if the market's up, if the market's down, I am investing regardless of what the market does. I could care less what it does. We are putting money in there through dollar cost averaging every 2 weeks. And we have been actually doing this for years. Majority of individuals do this through a 401k plan. But in addition to my 401k plan, we do have a regular brokerage account. And of course, being able to stack a lot more money in there, meanings that had the power to compound. And we are starting to see really the big impact of the patience and discipline of putting money in there and putting it into continuously. Now, of course, they're goal-driven and persistent. Again, coming back to wealthy people, coming back to millionaires, it is about keeping your eye on the prize. If there is something that you want to do, amazingly enough, humans are very flexible in getting it done. If you have an unexpected expense in your life, most of the time you can come up with the money with very little adjustment. Wealthy people really reinvest their strategies and keep themselves motivated, looking through hurdles. when you look at people, especially nowadays, when you look in the workforce, when you look at people that are motivated and really high achievers, they stand out in such a bright light that it's kind of incredible. Where if you go to your job and let's say you're just putting in 60% effort, imagine if you did 80, imagine if you did 100, imagine if you wanted to hit your goal and you really were that shining star within the company. I guarantee you it would be higher raises, it'd be bigger promotions, you'd be looking for external opportunities. There would be a lot more things when you are goal driven, when you are persistent. And that again goes back to my dedication to YouTube. I love the financial education piece. I love the ability to build wealth and also to really prioritize investing with you guys. It is something that I love. And of course, when it comes to risk management, they prioritize risk management, which again is very important. We do not take risk blindly. This goes back to the old Warren Buffett. Never invest into something that you do not know what it is, because again, it is going to be a losing game. When you start looking at real estate, when you start looking for cryptocurrency, when you start looking at investments, if you don't understand it well enough to explain it to other people and really make sense of the explanation, it is something that you should not be investing in at all. And of course, looking at ways to continuously educate yourself when it comes to risk management, having a backup plan if something should happen again with your primary income, changing your investment products, looking at insurance products that they have, and also adjusting that business plan to make sure that you're really focused on it. And when it comes to being wealthy, the big thing that you look is time. When you look at being wealthy, when you look at investing, it is about time. When you think of your personal life, having the ability to spend time with your family, going on vacation, it is about time. Now, this often does not grow wealth, but it can grow wealth where, for me, for instance, doing editing within YouTube videos, it takes an exponential amount of time. Now, what is my time worth to me if I go through and I edit a video and I spend 5 hours doing it, or if I outsource it to someone over on Fiverr that can actually edit the video for me and make it really clean cut with a very minimal time? Is it really worth the time and effort I'm putting into it that I could pay someone else to go ahead and do it? It is really the time, money aspect that we have. And as we continue to grow and build this channel, it is going to be to a point where we're hiring an editor, that we're having someone who is designing thumbnails. We're not there yet, but eventually we're going to be. That way I can really optimize and maximize my time, making more content without having the whole side of it for the editing and really that side of YouTube. And of course, looking at tax moves. When you start looking at taxes, hire a professional. I cannot stress this enough. When you look at a lot of the certified public accountants or the CPAs, if you're earning money, you have to make sure that you have something that is tax advantageous to you. And this is how, when it comes to taxes, planning donations, investments, expediting, and keeping up, having your tax bill as low as possible means the less money you're paying in taxes, the more money that you get to retain as an individual, meaning that you get to keep more of those hard-earned dollars, making sure, again, that you're not hopping on TurboTax, trying to do it yourself, even though a lot of people do. You might be missing out on some of those loopholes. And the final one I'm going to leave you on this list of 15 is networking with individuals. When you fill yourself and really fill your life networking with individuals that you want to be or at the status that you are, they always say that you can really be determined by your closest friends, which I feel is really true. When you start looking at investment opportunities, when you start looking at partnerships, the chance to grow your wealth even further, there is a group of individuals, and of course, they're community leaders, they're developmental, going to networking events. Even though it might cost a little bit of money, the benefit that you can get out of it is absolutely game changing. And I do the same on a county level. We do it locally. There is a lot of prioritizing and networking that goes on, and it does make a really big difference because you can get in touch with some people that are running in the same circle. Even looking at the VRA community, the Video Ranking Academy, a lot of people who are out there doing YouTube videos, and we are reliant on the source, and really the networking ability that we have within that program works incredibly well. And a big shout out to Sean. Awesome to see these videos. But all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.